What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see a continuation of the strong bounce as we start to get a bullish breakout. Will the breakout look hold? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we're up 1.25% and we're starting to get that bullish breakout look, and we're on the third day in a row of a very strong bounce. We got a daily close back above our resistance trend line and back above the 50 EMA, and we're starting to take out the previous highs from early March. So from here, in order for this to continue to look bullish, we need to start forming a higher low, and we need to continue to make higher highs after we bounce off of that low. So we already have the breakout look, so now when we get the retest, we need to hold above any of these critical support levels, get a strong bounce that's at a higher low, and then take out the previous high, and that should be the confirmation that we're going back into a bull market and we're going higher from here. Remember that anytime you get a breakout look, there's always going to be the possibility that it's a false breakout, so you don't just want to chase it unless you're willing to take a loss if you're wrong. So right now your risk level is all the way down here at 428 because we're more than likely going to start seeing a pullback from here. Even in the bullish scenario, we need a pullback. We can't just go up in a straight line forever. So eventually we're going to find resistance and get a much better entry opportunity at the higher low. And if we do get a bounce off of a strong support and we start to see a higher low forming, then we can start getting bullish with a lot better risk reward setup. So disciplined bulls that were buying the dip back here near 416 are going to be taking profits, and bears are going to start shorting at resistance, so look for a pullback in the near term. That doesn't mean it's bearish because overall we're losing the bear trend and we're getting the bullish breakout, so look for that confirmation of a successful retest and a higher low forming, and that will be your evidence that we're going right back on the bull. So strong support will be at our 20 simple moving average right around 429, and you already know we have strong support at 428. If we start breaking below 428 and we still form a higher low above 416, that's still going to be a bullish development. So watch the price action because you're going to learn a lot over the next 3 to 5 days of whether or not we're getting a bullish breakout or this is all just going to be one giant bull trap and we're going to eventually come back down and form new lows. Now, if we continue to bounce from here, you're looking for the next strong resistance right around 446 and 450. And I don't think we can go too much higher than those levels without a pullback, so watch those as the next strongest resistance levels. On the NASDAQ 100 triple Qs, we are up 1.21% today in a very similar story as SPY, getting the bullish breakout with the second day in a row closing above the resistance trend line and the second day in a row closing back above the 20 simple moving average. So look for strong support right around 340 and 336, and if we break below 336, the higher low needs to stay above 318, otherwise we're forming a new low and we're going down to 315 or 308. The next very critical resistance levels will be at 347 and 351, and right around 352.5 if we do get back over the 50 EMA. Remember, nothing goes up in a straight line forever, so you should be expecting a pullback even if you're getting bullish, especially as we start running into some of these resistance levels. In the Dow Jones, we're up 1.2%, and we see the Dow Jones also getting a bullish breakout, closing back above the 50 EMA, but still below the bullish breakout level of 347. So the next critical resistance for the Dow Jones will be 347, and above that, watch for strong resistance right around 350. On the pullback, you're looking for support levels around 343 and 340 and our 20 simple moving average at 335. So watch all of those levels as they're the most critical support levels. And as long as we can stay above about 330, we'll be forming a higher low, and that will be a bullish development. On the Russell 2000 IWM, we are up 1.57% today, closing right on top of our resistance trend line and getting a bullish breakout back over the 50 EMA, so a close just above 204. The next bullish breakouts from here will be a close above 207, and then we're getting bullish confirmation on a close back above 212. Downside support will be right around 203 to 204, and our 20 simple moving average right around 199, and we still have strong support at 197, and we do have a gap down here right around 196. So watch all of those as very strong support and a potential for a higher low as long as we're above about 192. On the ARKK ETF, we're up 4.81% today, and we did get a daily close back above the 20 simple moving average, but we need a second day confirmation. So far, this is starting to look like a bullish breakout, but we have a huge gap to fill below at 54.7. And this is still in a bear market and it's still in a bear trend. So it's still very possible this is all just a bull trap. Look for downside support at 60 and that gap closed at 54.7. And the previous low is down here at 52. You'll have upside resistance at 64 and 69 and the previous daily high right around 71. On the VIX, we were down 3.68% today, and we continue to see the VIX heading lower in the second day in a row, closing back below the 50 EMA. The bears won't give up that easily, so look for the VIX to possibly find support at 24. So the next time the VIX closes below 24, that will be a bullish development. And the next time the VIX closes below 20, we're more than likely going to be in a sustainable bull market. Be a lot more careful if the VIX closes back above 30 because we're more than likely going down for a next leg lower if we see volatility returning to this market. On Bitcoin, we're currently relatively flat, but still trading above the 50 EMA and starting to develop a bull trend. You can get a lot more bullish on a break above 42,000 with a bullish breakout back above 45,000. And you need to be getting a lot more bearish if we close below 37,000 because it means we're more than likely going all the way back down to 30K. Everything in between is going to be choppy. As you can see, it's all just consolidation. So wait for a bullish breakout above 45,000 or a bearish breakdown below 37,000. On NVIDIA stock, we're up 1.1% today, and we're starting to see confirmation of a bullish breakout in NVIDIA with the first close back above the 50 EMA and the second day in a row closing back above the resistance trend line. From here, we can retest resistance at 253, and then a bullish breakout will be back above 267, and then we should start to run into the low 300s. To the downside, look for support right around 245, 236, and our 20 simple moving average at 232. And as long as we stay above the previous low at 213, we're getting bullish developments in NVIDIA stock. On Tesla stock, we're up 3.73% today, and we did get the second day in a row closing back above the 20 simple moving average, and we're very close to retesting critical resistance right around 890 and 900. If we start closing back above 900, you could throw the price target at 592 in the trash can, but as long as we're below 900, that's still a valid price target. Look for the bullish breakout back above 900 and then back above 937 with downside support right around 828 to 830, and below that, you're looking to see a higher low forming back above 763. If we break down below 763, we'll continue the bear trend with downside support at 709 and the price target at 592. On Apple stock, we're up 0.65% today, and Apple is getting very close to retesting resistance at 162, and above that, we'll have resistance right around 165. We're getting a lot more bullish above 165 and 168, but we don't have a bullish breakout just yet, and we're still below the 20 simple moving average, so still watch downside support at 157, 152, and 150. On the financial sector, we're up 1.25% today, closing back over the 50 EMA and reversing the bear trend. This is definitely a bullish breakout, but from here, we still do have a gap to fill, so don't rule out the possibility that we retrace to fill the gap at 37.5. On the industrial sector, we're up 1.29% today, getting the second day in a row closing back above the 50 EMA and starting to develop a bull trend. From here, we could easily start trending higher to go close that gap at 106. On the healthcare sector, we're up 1.58% today, starting to develop a bull trend in the third day in a row back above the 50 EMA. From here, we could develop a bull trend and start trending up to close the gap at 141. On the energy sector, we're up 3.44% today, and the energy sector did hold on to the support trend line and did get a bullish bounce. So from here, we could be heading up to retest resistance right around 76. If at any point we lose the support trend line, the energy sector could be rolling over, which will be bullish for the rest of the S&P 500 as that cash is much better off in other sectors. So jumping back over to the S&P 500, we are definitely starting to see some bullish breakthroughs, but we need confirmation and we need to see a successful retest of the breakout. Don't be getting FOMO because we're coming out of a strong downtrend. There's no way we're just going to go right back up to all-time highs in a V-shaped recovery. There's going to be a lot of consolidation and lots of tests, and there's still going to be plenty of traps while the VIX is above 24. If you start seeing the VIX getting crushed back down below 20, you'll more than likely have your confirmation that we're going right back on the bull, and from there we can start seeing what kind of trend we're developing. So without a doubt, this is bullish price action, but we need to get that confirmation. Otherwise, you're taking on way too much risk by chasing at these levels. If you've been buying the dip as a trader, don't be afraid to lock some profits because there's more than likely a better buying opportunity coming right around the corner. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can find out all of the information and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. Also, just as a little bonus, if you're looking at the Bear Bull survey, you can see that we're almost up to 50% of the people that are bearish, and that is a great contrarian indication that the stock market could be rallying in the next 3 to 6 months. So we're starting to get bullish breakouts at the same time we have a lot of bearish sentiment, so this could be a sustainable bull rally that could take us all the way through April. So don't rule that out as a possibility. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.